Talk about the property market now and talk about how people finance their property aspirations. Listen to this. It says here, as a result of low interest rates and an upbeat property outlook for 2013, buyers and investors are increasingly looking to take advantage of potential opportunities in the property market. However, investors and developers are at times unable to obtain the required finance. A familiar story. In the Cape Town studio with me is the CEO of Paragon, and that is Paragon Lending Solutions, to be precise, and it's Gary Palmer. Gary, thanks very much for coming in. So what you're saying is, broadly speaking, is that the traditional ways, i.e. going to the bank and saying, hello, I'm Lindsay Williams, I need a loan, and they say, no, come back in a couple of years' time, that leaves a niche and leaves a few gaps for companies like Paragon.
Absolutely. I mean, we've seen over the last few years, especially since 2008, that the landscape has changed completely. Before, you could phone your bank manager and then obtain a loan relatively easily. But there's a slight mismatch between the bank's appetite to lend and the consumer willing to wanting to borrow money to purchase properties.
Which is so strange, sorry to interrupt, given the rise of unsecured lending in South Africa, and yet this presumably is secured lending because the person that you're lending to has an income every month, otherwise he or she wouldn't get the loan, and you're buying a fixed asset.
Absolutely right. You would think it's more secure for the banks to be lending against with the first bond against the property. It's less about the security and more about the returns. Basel III is obviously in play at the moment, and it's caused huge pressure on the banks in terms of their margins. As interest rates are very low at the moment, it's called the endowment effect. The banks aren't earning as much money on those loans as what they used to. So they now focus their energies on unsecured lending because there they can charge a premium. So whilst the risk has increased dramatically, they're charging instead of on commercial properties prime or prime -1 to now they're falling within the NCA.
So they shift their policies given purely because of the amount of money they make. So they're not going to provide some kind of social program in order to make people property owners. They'll just say, no, we don't make enough money on that. We'd rather lend to you to buy a holiday or something.
Yeah, I mean, being an ex-banker myself, the banks are driven obviously by profits, but also in terms of what is best for the consumer. So I'm not saying the banks are only chasing the returns at all. I think that there was a big gap in the market where the banks perhaps weren't playing to be able to provide funding to a specific market that they weren't focused on before.
And also the property market, although you say it's upbeat for 2013, I have to challenge you there. Everyone else I've spoken to in the property market, whether they be people that are offering finance for houses or estate agents, they say we don't see any growth in 2013. So maybe the banks there are therefore saying, well, if somebody defaults on their mortgage, we're not going to be able to sell this at a profit.
Well, a few points there. I mean, I think which area of the property market is doing particularly well. I think on commercial property, when you've got very strong tenants, everybody is chasing those transactions, from the listed funds to the individual investors. So that market is strong, and you've seen it. I mean, if you look at the share price of Growth Point and Redefine, they're very strong at the moment. Residential property, you're 100% right. It's really taken a bad knock over the last few years. But what I'm seeing in the market is those properties under R1 million, they're selling a lot better this year than they did last year. Yeah. It's that middle gap, the gap between, call it R1 million and 3 million in residential, that's still struggling.
And that's where you come in.
No, we come in on all facets from commercial property. Our main focus is commercial property. The issue is that given all the regulations at the moment, which the banks have to comply with, we're finding that their turnaround time is just a lot longer than it used to be, and they are taking a little bit more of a conservative view. So that's where non-bank lenders can now play a part in the market.
A non-bank lender, so Paragon Lending Solutions. Can you tell us how your business works?
Yeah, absolutely. I mean, we provide short-term to medium-term funding, 12 to 24-month funding, secured by property, to clients who are what we call asset-rich, but maybe liquidity, they're just struggling at the moment. And what they're looking for is really a medium-term breathing space.
Not a bridging loan.
There's a slight difference between bridging. I mean, traditional bridging finance is, a seller's advance. Once you've sold your property and you're looking to access a bit of equity, I mean, that market's still strong at the moment. Clients are always looking for that type of funding. We play in the space between bridging and term loans from the banks. So where clients have got the assets and they're looking for that breathing space until they're in a position to sell the asset or refinance through a bank.
Of course, what's going to happen now is that the banks are going to be watching this, as we know that they do, and they're going to say, wait a second, he's making a very good point. Let's set set up a division, just like a Paragon, to complement what we're already doing?
Well, I think the point is that they used to do pretty much what we're doing at the moment, but again, their focus has changed now to, if they are going to lend against properties, let's make sure there's strong leases in place, and it's where they can see the income over a period of, call it 10 years. But they've moved away from traditional asset-based lending, and as I say, they're focusing a lot on personal loans and unsecured lending at the moment.
How big is your book at the moment? How big is the demand? And the reason I ask this is because it's interesting that you focus mainly on the commercial side of things, and so therefore commercial must be picking up, which is very good for the economy.
Oh, completely. I mean, the demand, we inundated with phone calls. There are also other lenders besides ourselves who we work closely with. But again, in this market, one also has to tread carefully. We declined quite a few transactions, more than we approve. So it's not such an easy process to get finance, even from sort of non-bank lenders. But the market, it's a very, very big market in terms of clients who find a transaction, need the funding, need to move quickly. I mean, our turnaround time is 2 weeks, and then the client's got a formal bank guarantee, which is
sorry to interrupt again. Why do they need to move so quickly? To me, if you're buying a commercial property, it's not something you just go out and say, oh look, there's a nice factory there, let's get it going, and if I don't get it going within a couple of weeks, then the deal's lost.
Yes. Our market's divided into two. Those clients who've got existing assets at the moment, they would like to gear up those assets in order to enable them to fund their business, or or fund another property. So that's a big part of the market, where clients have got existing assets. For those clients who are looking to buy a property, unfortunately, a lot of clients believe that they can get the funding from the bank relatively quickly. So they have, in terms of their agreement, 14 days or 30 days to issue formal bank guarantees. They go to, maybe they've had a relationship for years with one bank, and they go there, unfortunately, they get declined. So now they're rushing around looking for funding, so they don't miss, so they don't go into breach.